Private home prices in Singapore rose for the fourth straight quarter, climbing 2.9% in the first 3 months of the year. That is the sharpest quarterly increase in almost 3 years. HDB resale prices also went up, according to the latest flash estimates.
The private residential market picked up momentum in the first quarter of the year as COVID-19 vaccinations injected confidence in the prospect of economic recovery. Gains in private home prices were led by landed properties, which grew 5.6%. Non-landed private homes also rose 2.1%, supported by strong condominium sales in the city fringes, such as Normanton Park and the Reef at King's Dock. But figures are raising expectations of cooling measures to keep prices in check. These were last introduced in 2018 after private residential prices rose by over 3% in 2 consecutive quarters.
I think government actually may have to balance between introducing cooling measures to stabilize the market. On the other hand, the economy is just starting to get back from the recession after the pandemic. I think all these cooling measures may have also an unintended consequence if they are not introduced properly.
Public housing resale prices also rose for a 4th consecutive quarter to hit 2.8%, with over 50 resale flats sold for at least $1 million, according to one analyst. Those we spoke with say pent-up demand is pushing up prices. That's even as HDB is set to launch about 8,700 BTO flats by August. Going forward, most analysts expect both the private and public housing markets to grow this year.
We are looking at, say, maybe up to 5% increase in terms of prices for the HDB resale market. For the private market-wise, there is a possibility of the government stepping in to so-called cool the market. But overall, we still expect positive price growth for the whole of 2021, up to, we say, 5%.
Official figures for the full quarter will be released in about 3 weeks.